I want to bring in Charlie Bobrinskoy. He's head of research over at Ariel Investments and a frequent guest here on Street Smart. He also co-runs the Ariel Focus Fund, which remains near the top 10% of its class over the short and long term. Charlie, good to have you back with Matt and myself on Street Smart. So you guys are doing fairly well here in a tough environment. How are you navigating through?
Quality has outperformed, and we've been predicting this for years, and it was a prediction that didn't seem to come true. And now finally some of the larger cap stocks that were very cheap on an absolute valuation method are finally starting to do better. Names like IBM, names like Johnson & Johnson, Exxon are outperforming the market.
So Charlie, safe to say that on some of these dips that you are buying in at these points because you're seeing some great deals?
Yeah, I mean, so far on the really bad days, it has actually been the lower quality stuff that's gotten hit very hard. And the financials, of course, extremely hard. So when quality financials like Goldman and Morgan Stanley have gotten hit, we have added to them.
What do you think about the financials, Charlie, in general? I mean, you know that they're so beat up big time this year. And actually, before I get your response, let me bring in Suzanne, because Suzanne, you're actually watching the financials lead today's rally. So different from what we've seen throughout the year, but they're still one of the most controversial groups, or more controversial groups out there.
They are, Carolyn. As Charlie was saying, they let us down yesterday. They let us up again today. And you had a combination of the quality names. JP Morgan, a big winner in the Dow today, but so was Bank of America. As we know, that's one of the more troubled banks out there, even though CEO Brian Moynihan got in front of all the problems, or tried to answer investor questions throughout the week today. Whether it worked or not, we don't know. We had ISI take down their numbers estimates for Bank of America. A lot of questions that were not addressed on the conference call with Bruce Berkowitz yesterday. But you're talking about some of the other quality names like Morgan Stanley, Goldman Sachs. These are some of your worst performers. So, Charlie, I will ask you, what does the market not see in Goldman Sachs or Morgan Stanley? These stocks are down so sharply this year, yet we had James Gorman come out and spend $2 million of his own money and buy Morgan Stanley stock last week, and it just doesn't seem to have any incentive for other investors.
Yeah, it's exactly what they don't see that's the problem. They're worried that there are big holes, big losses that aren't in the company's books yet. And we as investors are spending a lot of time trying to find out where those holes might be. Could there be a loss somewhere in the portfolio that they aren't recognizing? We don't see it. This is not like '08, where there were the massive subprime losses, the massive mortgage losses. In fact, fixed income securities are trading up. Treasuries are trading up. Mortgages are trading up. Corporate debt is trading up. So we just, at this point, don't see the big losses that have, in theory, driven the stocks down.
All right, Charlie, but not all financials are created equal. I mean, what do you think about a name like Bank of America, beaten up very big, big time here, down about 45% this year? Do you think investors are right to be worried about Bank of America?
We have avoided Bank of America because we could have real problems there. They're obviously, with Countrywide, the biggest lender, the biggest originator of mortgages. It's hard to put your finger on what the losses will be there, and there are going to be litigation losses. We don't see that same kind of thing at Morgan Stanley and Goldman Sachs, where they're writing these mortgages, writing these securities to market every day.
So, Charlie, give me a longer-term perspective here. I mean, when do you expect this to shake out? Is it anytime soon, or do we have to get through what D.C. does come November, December? I mean, what are you thinking here?
Yeah, unfortunately, I have no idea how the market's going to trade in the short term. I don't think anybody else does either. But what I can do is I can compare stock prices of individual companies to the underlying values of those companies. And we've just got some great values out there. We have Johnson & Johnson trading at a 3.7% dividend yield. That's a higher dividend yield than their bonds yield. And their dividends have gone up every year for the last 36 years. We have companies like Microsoft trading at less than 10 times earnings when you back out the cash. We have high-quality companies trading at earnings yields of about 10%. So can't tell you what the market's going to do next week, but I do feel like longer term, we've got great values here.
But it doesn't sound like you're aggressively buying, right?
Well, no, we're fully invested. Our fund has got 98.8% equities and a small amount of cash because we've had some inflows. So we're all in the market. But I won't sell my high quality to buy a riskier name today.
Got it. Going to leave it there. Hey, Charlie, good to get some time with you. Charlie Bobrinskoy.
Thanks, Carol.
You bet.